Welcome to Accountants Minute. I'm Peter Towers, Managing Director of ESS BIZTOOLS and ESS Bassett. Crowd-sourced funding, equity raising capital has finally been passed by the Australian Parliament. This is great news for small medium enterprise operators, entrepreneurs and members of the public who wish to be able to invest in new types of companies. But also it is great news for accountants and business advisors, because every one of these companies is going to require strong professional advice to be able to perform, hopefully, as outstanding companies. So the legislation says that the only entity that can raise money under the crowdfunding strategy is an unlisted public company. The legislation has introduced a special concept whereby a proprietary limited company can convert to an unlisted public company and then raise capital. The amount of capital that can be raised is up to $5 million every 12 months. The companies that can raise the capital must have group turnover of less than $25 million and group assets of less than $25 million. Retail investors can invest up to $10,000 every 12 months per company. There is a cooling off period for retail investors of 5 days. Sophisticated investors can invest any sum of money, and there is no cooling off period for sophisticated investors. The legislation has introduced the concept of a gatekeeper. The gatekeeper is a business with an Australian financial services industry licence who will have to check the various documentation that the legislation indicates that the company has to produce, and once they are satisfied that the appropriate forms and documents have been produced, the gatekeeper can list an individual company on their website so that investors or potential investors can view the information, view the warnings, view the documentation, including the business plans, and the member of the public, the crowd as the legislation refers to them, can then decide whether to invest in that company, and if so, they need to fill in the application form and transfer their money to the gatekeeper. The maximum that a company can list its interest in acquiring capital on the gatekeeper's website is 3 months, but it can be an earlier period subject to the decision of the company. At the end of the period, whether it's 1 or 2 months or 3 months, the gatekeeper will submit a report to the company to say this is the amount of capital that's been raised, and if the minimum sum was raised, he would transfer the sum raised less his agreed fee to the company's bank account, together with a list of the company's new shareholders. If the capital raising was not sufficient to meet the targeted sum, the gatekeeper will then return to the investors their investment amounts and indicate to them that unfortunately the minimum sum was not able to be raised. The legislation has introduced a 5-year exemption for current proprietary limited companies to comply with the new regulations, and these include if the company raises less than $1 million over that 5-year period, it does not have to appoint an auditor. There is no requirement to comply with the continuous disclosure rules. The company does not have to hold an annual general meeting, and the company does not have to produce paper annual reports. The big opportunity for accountants is that this legislation creates the opportunity for accountants to initiate new revenue streams. You might recall that about 3 years ago, Deloitte published a report relative to digital disruption, wherein they recommended that accountants should be investigating the potential to create new revenue streams. Well, this is a great new revenue stream. And once again, you can thank the Australian government for having created this type of entity. The government expects thousands of companies to try to take advantage of this legislation. When the Prime Minister initially announced the innovation strategy in December 2015, he indicated that there were 4,500 companies unable to raise capital in 2015. When I published an article referring to that, I had a couple of emails and phone calls which said, where did the 4,500 figure come from? I made some inquiries and discovered that it was the figure that AusIndustry indicated to the government of people who had contacted them or complained to them that they were unable to raise capital in 2015. A number of people have since said to me, would you send a client to AusIndustry to say that you couldn't raise capital? And I don't think I would. So the message I'm trying to give to you is there could be a substantially higher figure than 4,500 who wish to raise capital. From an accountant's point of view, you could also be looking at a range of matters, including corporate governance advice for these clients, because many of them are going to need advice as to how a public company would operate. Advice on the structure of the business operations, looking at things like protecting the intellectual property of the business, talking to patent attorneys, receiving market reports, development of a marketing plan, and then from an accountant's point of view, preparation of a business plan, management plan, preparation of budgets and cash flow forecasts, looking at the next 3 years as to how this company is going to operate, preparation of the information memorandum that's going to be necessary for compliance with the Corporations Code. Accountants could also be involved in audits, because some of these companies will decide that for sound corporate governance and accountability reasons, they will appoint an auditor from day one. And frankly, I think they should. If they're going to raise money from the public, I think they should be appointing an auditor. The local tennis club and football club and cricket clubs appoint auditors. And if you're going to go to the market potentially able to raise up to $5 million, well, if you're over $1 million, you do have to appoint, but let's say up to $900,000, I think you should be appointing an auditor. And many of these companies are going to require experienced accountants, financial people, to be directors, because bear in mind they need a minimum of 3 directors. They are operating as a public company. This legislation starts in September 2017, but don't leave it to then to start thinking about it. You need to be thinking about it now, because you will have businesses starting to ask questions. Are you going to be able to help them? Or are you going to let an SME or an entrepreneur that you're currently acting for, you might only be doing a tax return at present, you're going to let them go off and talk to other firms without making a pitch to them for you to do their work? ESS BIZTOOLS and ESS BASIP are going to develop a full product package, just as we did for early stage innovation companies, to assist you to deliver these services to your clients. We will be launching the crowdfunding equity raising package on the 20th of April, and we will be sending you a separate invitation to participate in that very important webinar. We look forward to you joining us on at that stage. If you have any questions as to how the crowdfunding legislation is going to operate, please send me an email, peter@essbiztools.com.au, and we will get back to you. But please don't put this off. This is an outstanding opportunity for accountants to develop a new revenue stream within business advisory services. We look forward to working with you in supplying the material and templates and forms that you're going to need to be able to assist these companies. Have a great day. Goodbye.